Hello traders, good evening, good weekend to all. How are you today? Vladimir here, and this is the weekly forecast for the week 15th of May 2016. Last week was a bit boring. Let's call the baby on its right name. We still have some move, especially on Friday, where we got a wake up of the dollar, but mainly the moves were very weak, which makes sense. Nothing fun, nothing too surprising or crazy happened on the fundamental area, so the market had nothing special to react to. But the sooner we get to June, the bigger the volatility will be, I believe so. And the reason is, of course, the referendum and Britain, the vote for Brexit, the potential cash rate hike on USA, Draghi's speech and the quantitative easings program, and more. We have many events, and the closer we get to that, the stronger it all will be. Now I want to start this week with the news we can expect. And now take a look what happened today. Trade balance in China. You see that? Great surprise. Sorry, that happened last week, right? And today we got industrial production. You see this drop? This is a really serious drop. Now that brings us to the coming week. Monday is going to start quiet as we have a holiday in Europe, and then slowly warming up. And the fact that China had such bad news actually bring us back to the New Zealand dollar and Australian dollar, which I will start with very soon. So what's really how we have to pay attention to this week? We have warming up until Wednesday. Then we have the climate count change and the average in Britain. Very important for the GBP, of course. But then the eyes go to FOMC this Wednesday. The market does not expect the Fed to take any action in May. The speculations are talking about the summertime, which is June, which also makes sense as they will probably hold and see what's going to happen and where the wind blows to the Brexit. And Thursday and Friday we have G7 meetings. We're going to discuss the oil prices and the entire financial environment worldwide. Back to Australian dollar and New Zealand dollar. The bad news from China could affect with the market opening on Sunday night, European time, of course, and could create gaps on these pairs, the Pacific pairs, as they are very affected by that. Now, what could happen actually on the Aussie dollar is one scenario like this. Take a look. That could turn to be this bearish cycle we have, could turn to be something like that. Some special cycle, making some gap and start to create correction right after that. Now, the leg on the middle, let's change the color so we have it a bit clearer. This one created a triple by itself, right? While the first one was this, and that's the big one, correction, and this one, right? So it is very reasonable. This is the area where we are going for the reversal. Maybe with the gap, some craziness, and then the reversal also makes sense. Now, what do we have on daily chart? We have supportive area. We have bullish hidden divergence from everywhere. We almost are on Bollinger Band zone, which is slightly lower. And on the weekly chart, as we can see as well, we have well, we actually, this is the same for like daily. We have the support area right here. That's slightly around 0.71, and one more push down could also create a weekly bullish hidden. Okay, so let's see. Don't rush to buy, to jump in. We'll always have the chance. No need to force things to happen, and we'll have to wait and see to see what for scenarios of convergences, right? We want to see first of all a turn around. Then and only then we can try the longs, right? So what we want to see is drop, top, drop, rally above to create the momentum, something like that on the MACD to create for us kind of convergence. And then we will be looking for pullbacks and try to return to the rally, especially on Wednesday, if the Fed will somehow disappoint the investor by telling that they are not going to increase the rates anyhow on the coming period. I don't see that happen, but that's possibility and somehow probability. So don't rush to jump in right here. Okay, since this area didn't hold, I'm talking about the 161.8 here. Okay, so this area on the first place didn't hold, right? We are now potentially looking about something different, as I said. And that would be the first cycle, which completed here the duplication, and that's to be something on same size. Okay, so this is reasonable, but we're not going to rush. We are going to look for the convergence scenario I suggested, and then, only then, we are going to try. Why? Just to play it safer. Now, here we got the convergence, right? Here, this was first, no, excuse me, that's not the convergence. That's where we got our place. It wasn't convergence by MACD, but it was convergence principle here. Okay, but this one was weak. Why? But on the 4-hour chart, it was weak, of course. Why? Because that's not a real high. And why this is not a real high? Very, very, very simple. Take a look and zoom in. You see what's going on here? We had one red candle which created kind of a high inside. That's not what we want. High is a move, right? Like a move, like here. That's a high, but that's not a high. Okay, so it's very, very important not to rush in on the 4-hour chart and the higher time frames. Intraday is different, a bit different story, because it's all based on the short-term noise. So you can jump in quickly, try to ride the beat, and works great. No, doesn't work, break even, and you don't fail, right? That's the idea. But for long run, you have to gain the patience here. So that's about the Aussie dollar. Now Kiwi dollar also is yet bearish. Last week we've been talking about this trend line breakout, right? Happened. We have a bearish convergence. We had a retrace, and we are after sales. Now, two scenarios to happen from here. Scenario number one. Okay, follow me. Kind of for double cycle here, and continuation drop down. Scenario number two, as we already had, kind of a correction. See that here, right? We got the principle of something like that here. Okay, we got below, so retrace, and we could try to look for sales. Now, if we gain the momentum and we go below the last low, classical, then boom, boom, boom. That's what we are going to do versus this top. Okay, if we get the rally from here, we go back to this top, or maybe slightly above, and we start to look for sell positions. Why? Because of the convergence. It is still making it bearish. Chinese news could contribute. That what could take this Pacific pair to the downside, and that should be the boost, the potential boost for the Pacific pairs. And I am talking about pairs like pound New Zealandian, which you know how long I am about this pair, right? Now, what could happen with pound New Zealandian? It could easily continue higher, all the way to 217, 216, 217 area, and at the same time, it could make this short-term cycle something like that. Okay, one more push, and then a rally. It is doable. It is potential. We will have to see and actually wait to see, understand how it works. Now, this could turn to be head and shoulders, as I said, not once. Okay, previous one was two waves, and this one is two waves. So yeah, it's doable to get something like that, and it's also doable to get the continuation strength and go above this neckline. We are on a great place for longs. I definitely on the long view. We'll have to see and make sure we have the best setup. And so far, investment is the best thing to do. If we get one more wave down, that would provide the safest buy area. But with the Chinese news, there is a chance there will not be new low. Again, of course, it all depends on how the market actually will accept it, and we'll have to wait and see. Pound OZ, same story. Now, what's going on here? One more high would be ideal. To where? 201, 202. From there, look for sells. Why? Well, this is where we are going to get our duplication. Okay, it's sorry, it's actually slightly lower on this place. It's around 2 here on the 100. Now, does this really 100 is relevant for the short? And the answer is no. Why? Because this was 25 candles approximately. This is going to be twice bigger, even more. It is irrelevant as a cycle. Therefore, this cycle could turn to be something different completely. How? Okay, got my point. And this leg, which was around, here we go, 500 points, to go to here, which is around 500 points, and that brings us to the same 201 I've been talking about. So from the double, it looked like can bring us to above 2 anyway. It is going to turn to be probably special, which will bring us to 201. And why there? Because this is where it's going to close the gap as well. Really good place. Now, is there a chance it will still reverse from here? The answer is yes. There is still a trend line. And that's where we will have to see if we can get a false break. False break, we will want to have a close below this top. So we need to close below. Then this trend line will be broken, probably. And if it does, that's what we will want to see. Drop, correction, mark the top, break below, retrace, and then we can go for a sell. So what we need, once again, in the breakout, right? Get momentum, 2 waves up, break again below the top to be created on the correction. Okay, pull back, and you can go for a sell. Right? That's what we are going to look for. That could and should provide a great confirmation. Now again, why do we really at all want to go with the pullbacks? It improves the risk reward, and that's the main goal. We want to go for trades where the chances to be paid are the highest possible, right? And the reward to be paid is as high as possible. 1 to 2 is good, is great, but 1 to 4 is better, right? Now, since this is the first leg of the movement, 38.2 could definitely be target. So wherever the top is created, if it either it's here or slightly higher, okay, just mark it. 38.2 to 50 is going to be our first target area, while we will get divergence against us. Alright, next one, dollar Canadian. We've been talking about dollar Canadian. last week, we said we are going to go for buys to below 128. We got a great spike here, providing opportunity to buy bullish hidden divergence. I have nothing else to say. Hey, it looks good. It looks for continuing, and there are two ways this one is going to work. Way number one, slightly as it is, two waves to the upside, doable, reasonable, makes sense. Scenario number two is going to be slightly different. Since we had one false break here, one falls to the bottom, there is a chance we're going for something like that now. Okay. Again, which will make the job? Really, no idea. Both scenarios are possible. Both could happen. Only time will tell which one we are going to face. And for me, it's anyway longs. Any dip we get followed by bullish divergence is a long. In this case, last week opportunity, we had, oops, that's not the one I want. Here, we got 1, 2, 3, 4, and bullish divergence. I cannot find better setups than that. It's best. It provided a false break of the trend line here. It provided a horizontal false break. It provided a trend line breakout. Really great opportunities. And it provided what I love, the correction, the false break of the previous correction. Here, false break and retrace, followed by divergence. What can trader want more? So that's dollar CAD, two scenarios. We are aiming the 50 of the triple cycle we've had on daily, and then brings us to 136. And slightly lower, like more like 135 zone. Alright, so this is for the longer run for dollar CAD. Look to long every dip you can get. Okay, let's continue. Euro dollar. What's going to happen with this one? Well, I was on the view of longs, and to be honest, I still am. As long as we are above 112. If we break 112, that changes probably the game, and that could make the continuation of this ranging cycle. As long as we are above 112, I am still on a bullish view. Now, I was asked a lot why. For one reason, too many traders are shorting that, which could cause the last rally. Second, based on the cycles, this scenario of the duplication is still doable. That's what happened the first time. That's what could happen on the second time. Take a look how the correction went here. Okay, see that? Few waves. That could happen same way here, and then a rally. And technically, it's doable. But as long as this is holding. Now, how we are going to enter in such situation? For me, the best way is the change of the momentum. Could be 4 hour chart, could be 1 hour chart. First of all, bullish divergence. We don't have it currently unless it changed the slope. Okay, but what do we want to see? Change of the momentum. How does it look like? False break, first of all. Break below, close above. That's a false break. And then break above a trend line or break above a horizontal high, correction back to here. That's where we are minimizing the risk, increasing the potential reward. That's how we improve it. Okay? Then it's great to try the longs. If it fails and continues lower, crosses below 112, game is over. And then our chances are going to be neither we are after range, which means something like that, or we are after the corrective cycle, or another wave down to the bigger range here, which means if we go below here, 2 waves pull back and sell potentially here. But that's going to happen after we break the 112, as long as we are above, for me, yet to the upside. Pound dollar, well, I was the first to say potentially longs after last week, but this high didn't break. So now I want the next one, and the next high right now is here. I want to change the momentum. How? False break to complete, divergence to complete, break above this high, pullbacks, and here look to long. Mark this trend line, go above, and this is your greatest setup. Minimum risk, greatest potential reward. How far can we go from there? We could easily go for the triple. Easily. It is doable. Now watch, we have a trend line there. Getting closer to the trend line makes sense that there is a potential long. If we mark some expansions, we have it right here. Guess where the trend line goes? Oops. See that? Okay? You got my point. That's a great place to look for potential longs. All that is relevant while trend line holds. And that's, again, we will have to see and follow what the Fed will have for us this Wednesday. If there will be any hint for increasing the rates officially in June, expect the dollar to continue gain strength. Mr. Dollar Yen, the next one. What's going to happen here? I said not once I am under big doubts. We already saw the last bottom. I don't think so. But on the short term, two things could happen. 1, 2, then drop. Okay? Or one more false break. And then bigger rally. So far, the MACD is very bullish, so no need to actually change it. We had two waves up here, right? This is good time for correction. Correction could bring us back to the trend line, which from we could try the longs. On the short term, we had two false breaks here. 1, 2, right? And that's what could happen here. Okay, for two waves. If we get that, that would be great place for shorts. Okay, drop, rally, sells. The next scenario which could happen is we break the trend line, continue straight lower, break below this bottom of 106.50, 106 zone, rally slightly, and then we can go for sell versus this top. Okay, that should affect the euro yen, which again I really don't think that long term ended. I said it not once, not twice, even more. I believe we are after 118, 117, maybe even more. But all that is relevant while the trend line holds. So far it does hold. So for me, it is under bearish area. Now here is what happened here. We changed the momentum. How? The way I love false break, break below the bottom, and we got a convergence. So we will need to get some kind of pullback. If we get this pullback and while we remain below the trend line, look for potential sells here. Risk will be small. Target's gonna be huge. Another scenario could happen for the euro yen. As in the short term, we got this. We might get bullish hidden divergence, change around, one more rally towards 125 zone, still back to the trend line, still next to the trend line, but still below this top. And this double wave could provide after that even bigger sell around. That's a possible scenario. We will have to see how it goes while the market is waiting to the Fed. Two potential scenarios. Pound yen, same story. Changed after this scenario was one big wave, one small wave correction. One big wave, one small wave correction, which created another false break with a bearish divergence, and now gaining the convergence, which I love so much. If we can get the pullback while we stay below this top, we can pull back and we can try the shorts. Our shorts should lead us, according to the weekly chart, 147 approximately. So I do believe we are after special cycle here. Okay, so there are definitely more pressures for the sell. Now, 100%, of course, if this one change the game and we go for 1, 2, 3, 4, which is yet doable, but still holding the daily trend lines there, we are going to look for sells from around 158 to 160 approximately. Okay, so turn around for a second rally, and then we are going for a sell versus this trend line, of course, and as long as we do remain below this trend line as well. So that's for the yen pairs. And again, I can go with all the yen pairs. The idea will be exactly the same, so really no need to go nuts with all the possible pairs there. Euro pound. Well, euro pound from up on a few. I'll do it simple. As long as it holds this resistance of 0.7881 right here. Okay? I'm under bearish view. If it doesn't follow and take this scenario for something like that, good. I let it go. After that, we'll look for the divergences and this resistance and try to short. For me, the view remains same. While we are below the 0.81 area, I am under bearish view, and I believe we are after two bigger waves back to 0.75 zone at least. So I'll do it very, very short. Sell rallies or stay short as long as the resistance of 0.7881 holds. Very simple. Gold, silver. Well, there are two. For gold, I have two scenarios. Scenario number one, we are going for second wave back to 1350 and the 61 of this to go to short after that. Scenario number two, we are on second leg of correction. How? Leg number one, which is double cycle, leg number two range, and like this, back to this trend line, slightly higher, like this. Two scenarios. I am short on the short term. Let's see what and how the market will want to follow. Also Kiwi, next one. And also Kiwi actually changed the cycle. We saw that during the week on the updates. Still has this trend line from the bottom and the horizontal support. Potentially to recreate a divergence right there. So from up on a few 106 zone, slightly higher, slightly lower, is the next zone to watch for potential retraces, potential stops. We have this cycle right now, and that brings us again to 106. From there, we will want to see for momentum change. How? This one didn't work. See that? Change of momentum, convergence, and didn't work. So we're looking for the next cycle. We're on 106, and we will want the same. False break, change of momentum, pullbacks on lower time frames, bullish divergence, probably hidden, and continuation to the upside. While we hold above 104, 104.50, I am under bullish expectations. Going to oil and silver. Let's start with Mr. Oil. Find it first of all. Here we are. What's going to happen? Two things could happen with the oil. I'll make it very short for you. Scenario number one, we are going to 50, 51, 52 right here. Duplication of this cycle. Doable easily. Why? This was the big cycle, leg number one. This could be leg number two. And this could be beautiful triple leg. If we go there, we go to this place here. Where is the divergence to develop? We are going for massive shorts. Scenario number two, as long as this area holds, this is 61.8 expansion of this cycle with the divergence. it could easily start the retrace to the downside. And if it does, and it holds the resistance, go lower, we will be looking for a scenario like this. Leg 1, triangle, break below, retrace, and sell, 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 sell to 44, 43, and maybe all the way to close the gap around 39, right here. Two scenarios for the goal. Let's see which one we have. S&P did what we wanted and talked about. I'll make it short as well. As long as the trend line does hold, this is the potential head and shoulders. Okay, shoulder, head, shoulder. Now, shoulder number one. Let's see how it went. Few moves, few moves, few moves. So what could happen right now is we got a few moves here, rally. So we get a few moves here, and then a breakout. It is doable. It is possible. Once if we manage to gain the momentum below, we are going to break. We are going for a new bottom, and we are going for it probably and finally to the 38 or even 50 of this cycle. 1990, next target. 1950, next one. 1840, final one, which is the bottom of the weekly range. Stay bearish while the trend line holds and this resistance of 1278. So that would be all for this week. That's what we have. That's our best scenarios, and that's what we are going to trade. Remember the trades we spoke about in the last week with the euro card potentially to create here kind of a triangle. It's still doable, so just maybe in terms of some kind of a range like this. Yeah, still doable if it goes like this, of course. But if look potentially for longs there. And silver also followed what we wanted. Now potentially create a head and shoulders. If we manage to gain, we are going for correction back to the trend line right here, and again it's doable. Okay, now we do have potential bullish hidden divergence on daily, but it still didn't form though, and the 4-hour chart not really under divergence. So yeah, that one more push lower definitely makes sense, and it could be a head and shoulders or leg, range, leg. Okay, that's pretty much same like gold. So that would be all for this week. Thank you very much for watching. Leave your comment, leave your feedback. As I said not once, your feedbacks, my motivation. If you enjoy it, if you love it, that's for me most important. Of course, not that you just love it, that you find it useful and it helps you in your trading. That's why I'm doing that. That's the only reason you see me week after week sitting here during weekends in my free time recording this video for you, so you have your benefit of that. And I hope it helps. I hope it clarify the charts for you, give you some directions. Of course, not 100% right, but I write enough times so we can make money here on the market. So that's what gives me the drive to continue. So leave your feedback, leave your comment, leave your questions if you have any. Share with your friends or whoever you believe can have any benefit and advantage and help by watching that. I'll be very thankful for your help, of course, to share a word. And I'll see you during the week with a daily forecast. And quick reminder, we started the first week of live meetings during the European session and the American session so far. Knocking the wood, it works perfect. You guys love it, which for me, again, this is the most important thing. I know it is helpful according to your emails, of course, and your Skype messages. So how to join our live? The doors opened in the club, Vladimir Forex Signals.com. Once you're in, you get the access to the live events, and I will see you there. Of course, everything is recorded, so even if you cannot come live, it's uploaded within short time to the members area, and you can watch it, of course, and again use it for your trading as helpful. So that's all for now. Thanks a lot for watching. I wish you a wonderful week. Great trading. See you soon. Yours, Vladimir.